Well, the results are in. India's biggest companies have just gotten their report cards for the third quarter, and we're about to see who absolutely aced their exams and who might have struggled. Let's break it all down.
So who exactly made the honor roll? Who kind of struggled to keep up? And maybe, most interestingly, which results left everyone just scratching their heads? Let's dive in.
All right, first up, let's talk about the stars of the show. These are the companies that didn't just meet expectations, they completely blew them out of the water.
Leading the pack is Honasa Consumer. You probably know them as the company behind Mama Earth. Their net profits skyrocketed by an incredible 93% year over year. I mean, think about that. They almost doubled their profit in just 1 year.
Wow.
And Honasa wasn't the only one having a great quarter. Not at all. Indian Hotels, the folks who run the Taj Group, saw a massive 55% jump in profits. You can thank a huge surge in luxury travel and, of course, the wedding season for that. And then you have Hindustan Aeronautics, or HAL, with profits climbing by nearly 30%, all thanks to a really strong pipeline of orders.
Okay, so what about the established heavyweights? For these titans of industry, the story is usually less about that kind of explosive growth and more about solid, steady, reliable performance.
Just take a look at some of our key public sector undertakings, the PSUs. ONGC posted really solid results, and IRCTC's profit jumped by over 15%. And for investors, there was a nice little cherry on top. Both companies announced dividends.
But it wasn't all smooth sailing for the giants. In the consumer goods space, a huge name like Hindustan Unilever saw only a modest 3% growth. So why the slowdown? Well, a change in GST rates actually hit nearly 40% of their products. It's a pretty powerful reminder of how government policy can shake things up for even the biggest players out there.
Of course, every report card has its tough subjects. So now, let's look at the companies that faced some pretty serious challenges this quarter. Take Hindalco, for example. This metals giant saw its net profit fall by a staggering 45.1% compared to last year. That is a huge hit for such a major company.
But here's where it gets really interesting. Hindalco's revenue actually went up by 14%. So how on earth does that happen? How does a company sell more stuff but end up making less money? The answer is all about global commodity prices, which fell so much that they basically erased all of Hindalco's sales gains.
And Coal India's results are just a perfect example of how perspective is everything. See, if you compare their numbers to this time last year, things are down. But if you compare them to just the last quarter, their revenue is up significantly. It just goes to show you that short-term momentum can look very different from the long-term trend.
And now, for maybe the biggest puzzle of the entire quarter. This is a story that reminds us that when it comes to the stock market, things are not always what they seem.
So, Muthoot Finance, a major player in the gold loan industry, came out and reported its best earnings ever. A record-breaking quarter. So what do you think happened to their stock price? You'd think it would go through the roof, right? Well, you'd be wrong. Instead, it plunged. It dropped by over 11% right after they announced that amazing news.
So what gives? Why would the market punish a company for delivering its best performance in history? On the surface, it just doesn't make any sense.
Well, there are two likely reasons. The first is something called profit booking. Basically, investors who had already made good money on the stock decided it was a good time to sell and lock in those gains. But the second, and maybe more important reason, was just anxiety about the future. Investors were worried that this incredible quarter was the peak, and that growth might actually slow down from here.
So after all these ups, downs, and definite head-scratchers, what's the big picture here? What does this Q3 report card really tell us about the state of Indian business?
When you step back, 4 key themes really emerge. First, it's clear the premium market is absolutely thriving. Second, companies that are tied to commodities are really vulnerable to those big global price swings. Third, PSUs continue to be a bastion of stability. And finally, that whole Muthoot mystery teaches us a crucial lesson. The market is always looking ahead, and sometimes what's coming next matters a whole lot more than what just happened.
And that's really the story of Q3. A booming high-end, a squeezed middle, and a market that's constantly trying to predict the future. And it leaves us with one big question as we look ahead. What will the next report card reveal?